Thank you very much, and good afternoon, everybody. Great to see you. I know it's late in the afternoon. We always try not to stand between people and the exit, but we will do our utmost to make this as interesting as possible. A bit of an intro. So, Binance and FiveWest are juristic partners for our derivatives business. If I say our derivatives business, Binance has derivatives business in South Africa. It's one of our biggest verticals in the Binance group. It's a specific reason for it. A lot of our institutional and retail users have taken up the derivatives product. So we're very excited about it. It stood us in good stead. What we want to cover this afternoon is just how to use some of it. Pierre's got a very good specific use case. Before we start, as always, we're just pointing everybody towards our Binance Academy page. It's vital for us that our users understand this product specifically. It is a high-risk product. It is a sophisticated product. So we ask, please have a look at the Binance Academy page, academy.binance.com. It's a free resource. We've created it for you guys so you can educate yourself up the learning curve. We'll be delighted if you can give it a couple of likes there. On to derivatives specifically. So in South Africa, through this partnership, we cover futures and options. I think we're going to stick mostly with the futures bit. We're not going to go into specific trading strategies. Those become very technical, but again, we do cover some of them on the webpage. We want to look at ways where people can use those to protect their businesses. For us, I look around us, a lot of us are entrepreneurs. You want to protect your balance sheet, you want to protect your value, and you want to make sure that there's as little value leakage as possible so that obviously you can optimize your product. So that's an intro to Binance. I think, Pierre, if you can maybe give a quick intro on FiveWest, and we go to that very exciting use case that I think is truly Pan-African. If you can give us a bit of detail on that, I think there's some excellent takeaways there.
Yeah, thank you. Thank you, Hannes. I think that's a very solid introduction. So FiveWest essentially is an OTC desk where we offer a lot of products and services to our clients, which revolve around remittance, around payments, around hedging yourself against local currencies. So we provide a lot of use cases. And we're not only just providing some compliance advice to Binance, but we're also a customer of Binance. We are using their futures or their options to hedge ourselves against the risk that we take when providing a payment service. We have a particular trading model that involves arbitrage as well. I'm not sure if you're familiar with arbitrage here in South Africa, but what it would entail is sending your ZAR offshore, exchanging it for US dollars, and then buying crypto for cheaper than what you can sell it for here again in South Africa. We also assist companies who might be making payments here into South Africa. So we've got a particular PSP who actually quote a KES rate in Kenya for ZAR, but that KES is actually calculated on a cross rate between KES Bitcoin and then Bitcoin ZAR. So what that means is that we receive that Bitcoin as part of a remittance platform, but we would need to hedge ourselves against any movement in that Bitcoin. And so if we can't sell it right away, we would be using a perpetual future on the Binance platform. What does that do? That means that we take a short position out, which means if the market goes down, we actually get paid out. And if it goes, we get paid out on the short position, but if it goes up, we make money on the long position. So in this way, we perfectly hedged. We can hold that Bitcoin for a prolonged period of time. And then when the time is right, we can sell it into the market. And we've mitigated any volatility in holding that Bitcoin position. Sure.
There's quite a bit there, Pierre, that I think we just need to dive into, guys. So if you think about, let's look at the working capital side of that balance sheet, specifically the Kenyan shillings trade. I want to contrast that for a moment with the traditional FX market. There's a lot of you who trade FX. You'll understand how this works. The US dollar is normally your reserve currency where all currency pairs are traded against. So you'll have a Kenyan shilling USD pair and you'll have a USD ZAR pair.
Yes.
Basically, just think about settlement times there, and I'm going to get to the derivatives bit in a moment, but just from a working capital perspective, you're going to go Kenyan shillings dollar and dollar rand. Folks, whichever way you look at it, you're in for a week to 2 weeks for all of this to clear. Depends on which platform you use, And then I'm not even talking about costs. What Pierre describes is we're not even talking about stable coins here. We're talking about a Bitcoin leg where you go Kenyan shilling Bitcoin, Bitcoin Rand. Just before we go on, Pierre, what's the typical settlement time here? Because I think that's particularly important.
Actually, that is a very good point. The reason I'm using Bitcoin as an example is there's lots of clients who still want the upside of holding Bitcoin, but they still like the capability to use it as a form of payment. And the reason they use that is what Hannes is alluding to, is the efficiency. So going from the KES to Bitcoin, and then receiving a payout in a ZAR bank account here in South Africa, it's 5 minutes. So what happens is when the Bitcoin lands in what is the designated FiveWest wallet, it automatically triggers a Rand payout. And this is key because what's changed quite a lot in the last few months is the willingness of banks to work with crypto companies to handle the offboarding aspects. And by offboarding, I mean is coming out of the closed eco payment system, which is the decentralized blockchain that you are transmitting the crypto on, and back into ZAR. So they're allowing us to actually tap into their APIs so that that can be automated. And only when it's automated can you get that transmission time of about 5 minutes without any manual intervention. So that's a big plus as more and more banks are looking to use crypto assets for cheaper, more effective and quicker remittance cross-border, particularly in Africa where it's very expensive if you're going through the SWIFT system.
Now, Pierre, again, if you take that 5 minutes to, let's be generous and say it's a week to settle dollars end to end.
Yeah.
If you're an entrepreneur of a small business, an importer, exporter, you can get your money within 5 minutes vis-a-vis a week. That accelerates your working capital cycle immediately by a week. You can then import whatever you're importing a week faster, sell it a week faster, and do it again and again and again. So your velocity of trade, and for me this is one of the key takeaways, is that your velocity of trade, just doing this faster and faster without having more people, without having a bigger overdraft, that's the key takeaway. The cost component itself, it's going to be a multiple.
Yeah.
I mean, between Binance's standard commission of 0.1%, I don't know what you guys charge at FiveWest, which is in that similar region. Again, so it's not only faster, it's cheaper as well. It's a 2x multiplier.
I think even to add to that, in many African countries, they can't get the US dollar reserves even if they wanted to. And that's a problem for them because without being able to get those US dollar reserves, they can't actually make that overseas payment. So by being able to trade into a US dollar stablecoin, they're immediately able to actually trade in ways that weren't possible before. So it's not even just the time, but it's just being able to trade at all. And then I don't know why I have this tendency to want to bring it back to Bitcoin as well, but Bitcoin has proven to be more stable than a lot of those African currencies. So it's also a hedge for them. Some are just moving into those positions to hedge themselves against the local currencies, which is also a good treasury management tool.
And that becomes almost a second part of the discussion. We've discussed about working capital, working assets, working liabilities, but let's look at the capital part of your balance sheet. Now, if done correctly, you generate a profit out of these trades. Let's use a case where you retain a lot of those profits in Bitcoin, so not stablecoin Bitcoin. Yeah. This is the premise of Michael Saylor's strategy business in the US. If you can then build a Bitcoin reserve within your company, you then have an asset that you can go borrow against. So now, again, you look at your balance sheet, we've touched the capital bit, we've touched the assets bit, and you've touched the liabilities as well. Now you have an asset against which you can finance your working capital cycle, and that can accelerate your trade even further.
Yeah, so that's very nicely put. So this actually sort of brings us to explaining how you can use options, or at least sort of Binance options, as part of a hedging mechanism where you can actually loan against those crypto assets. So you want to stay in the crypto market because you see the upside of holding crypto, but you've actually got payments that need to be made, so you can put that Bitcoin down as collateral. So we would take that Bitcoin as collateral and we might lend you ZAR or US dollars against that collateral. However, as a financial institution, we've got an issue now in that if the Bitcoin market had to drop, then that collateral falls away, which is a risk for us. So we would then use a put option where there's a strike price set that should the market collapse, we'll be able to sell that collateral at the strike price. And in that way, it's essentially getting insurance against the collateral that you're holding for the lending that you've provided to the client. It's just a nice use case for options. I think a lot of people tend to focus on futures and options from the speculative point of view, not really seeing the clear use cases that I'm explaining today.
And further to what Pierre described, there's a similar or what we call an equal and opposite trade, but again, on both sides of the equation. So let's look at your working capital cycle. Yep. You have 100 kilos of coffee beans coming into the country. Now, we don't offer coffee futures yet. Let's watch the space, maybe one day. Yes. Let's just look at the dollar component of that. You can now hedge that specific trade because you don't know what happens to the currency in that time. The commodity price, unfortunately, we can't hedge yet. But you can hedge yourself from a currency perspective, and then on that Bitcoin part of the capital side of your balance sheet, you can also hedge yourself. Yeah. We know it's volatile. We know, I think currently at about 107,000. But it went as low as 15,000. So to Pierre's point, you can now hedge your capital as well, because what you don't want is capital to seesaw. Hedge it at the right level, and you can lock in those gains as well while you borrow or lend against it. Yeah. No, I think that's very well put. I don't think I have much to add to that. So guys, that's the way we look at it. I think it's just, we look at this audience as an audience of entrepreneurs. You want to accelerate your business. You want to protect your capital, and you want to accelerate your working capital cycle velocity. So I think done on that basis, and then also looking at Africa. Africa is not a country, it's a continent. It's very difficult to manage cross-border currency flows. A lot of African countries don't have the dollar reserves to do this efficiently. This is where Bitcoin come in. This is where stable coins come in. So yeah, we do invite all of you to look at this. Please educate yourself on the futures component of it specifically. And both of us are on LinkedIn. If you have any specific onboarding questions, we're very happy to look at it. Okay. I think it'd be nice to see if there are a few questions that we can ask specifically. It's always nice to leave enough time to answer specific questions. Does anybody have a question? Maybe while we pass a microphone around, just a technical bit in terms of how this works. Remember, we do decentralized futures trading. So neither FiveWest nor Binance is a market maker in this. We always laugh about this, but futures trading on the Binance platform is a bit like Tinder. We don't make a market. We introduce parties to each other in a structured format. So we'll introduce a buyer and a seller to each other. They enter into a contract, but we don't make a market in that. So we don't make a market in Bitcoin. We don't make a market in Tether, but we introduce the party. So it's done on a decentralized basis. However, that sounds very risky. Have a look at the volumes. The chance that you're going to get knocked out of a position with a counterparty and there's not someone else who's going to be able to take your place, extremely low, especially if you stick to the big pairs. When it comes to leverage, just please be careful. I know we offer high leverage. It doesn't mean you need to take it. Match your trades to your requirements. Have a trading plan, have a capital plan, and just please no risky stuff, because if you don't have a plan, you're going to be caught out very quickly. Yeah. Just out of interest, how many people sitting here have traded futures or options in the past? Okay. And just out of interest, were you using it for leverage trading, or were you actually using it to hedge yourself for some reason? Leverage trading. Okay. No, I think that was the sense we had, which is why it was nice to just be able to explain some other use cases, because that's how most people understand futures and options. It's just to leverage. I think we had our first question over here.
If you borrow against your Bitcoin, what is the interest rate, or what do you pay for that? Yeah, more or less.
Yeah, so that is a good question. We're able to provide very competitive interest rates, on that, and that would be sitting at the moment around about 10-11%. And it does depend, obviously, on how much collateral you provide. We do tend to over-collateralize for obvious reasons. And like any bank, I mean, this is what I find about the banks. Banks essentially are merchants of debt. They're very good at calculating the risk of a trade and then assigning the corresponding interest rate. So there is that element of that. We also need to sort of understand what the loan is being used for.
Just the opposite side of that is if you place your crypto with an exchange for staking, again, please have a look at the counterparty. Sometimes as Binance, we will be your counterparty. You stake the crypto with us. However, you could also stake it with third parties. I ask everybody to please do your own research to determine who that third party is. Some people just click on the highest yield and you have no idea where it goes. We obviously screen those parties, but a lot of folks put their crypto, stake their crypto on decentralized exchanges. I'm not saying don't, I'm just saying please make sure you know who you deal with, otherwise it may not be there for very long.
Good. Are there any other questions? I think we sort of covered that aspect.
Just checking any other questions. Okay, well, it looks like we may be...
I know we've got a little bit of time. I think our intention was to be quite succinct about the examples that we used.
Yeah. Trading strategies, guys, there's a lot of information on the web. As I say, both Pierre and myself are registered with the FSCA as a key individual, so we can't really advise on that. But we can tell you that, again, the Binance Academy, please have a look at that. Lots of information on the... Use some of the test platforms. We've got a test platform where you can test trade a bit without putting your own capital in there. It's sometimes quite scary to see how quickly you can get knocked out. Again, I would formulate a plan, and I advise everybody to use the AI engines for this. Play around with a trading plan. Use ChatGPT to say, I've got this position. What do you recommend as a trading plan? Iterate on it, and then do a test trade to see how it works. So you've got a long position of Bitcoin. You want to protect yourself. What leverage do you need to take, etc. That's actually quite fun if it's not your own capital. You can see how the market moves. Also look at the market depth on the platform. You can clearly see what the volumes is going through there, and that just gets you a feel. You've got to feel these things. You can have all the knowledge in your head and it doesn't work. You've got to feel these things, like driving a car. Niki Lauda always said he had an excellent butt because he can feel the road, he can feel the car, and that's why he won races, not because he understood the engine. But just, again, educate yourself and get a feel of the market.
I think also we've spoken about it from an institutional point of view, but also you can experiment by using futures to hedge yourself in the in Bitcoin space. So I mean, you can play with that. There's actually funding rates that you can sometimes make depending on which direction the market seems to be moving. But it's a fun thing to play with, taking short positions out on Bitcoin.
Okay, I think that's all we have time for. So everybody, thanks very much for your time. We're grateful for you coming, and safe travels home. Thank you.
Thank you, guys.